just tell you a little bit about me. I spend every day in financial services. And you can imagine that that differs every day. And I also do marketing. And I started my firm around 7 years ago with the idea that around the intersection of really 3 ideas. That was next gen, wealth, and technology. Because as I mentioned before, for those of you who weren't in the room, this is my 20th year anniversary at Consumer Electronics Show. Thank God it's not my 50th anniversary here. But we know that things have changed, and I could see that things were going to be changing much more rapidly in financial services than any other industry. And the impact, because we're all based on money, was going to be really huge. And so I started thinking and just really taking notice of what was going on and talking to my clients. And then I started a little field research. And my field research with Millennials began right in my own home. I have 2 millennial sons, and that's where I learned the most, I would say, about millennials. I was not privy to developing such a huge cohort, as Andrew will tell us about, with the Millennials Disruption Index. But I can tell you that everything that I saw is definitely verified in the Millennials Disruption Index. So there's certain behaviors, certain feelings, certain choices, certain preferences that millennials have that most of us as baby boomers, as I am, really don't embrace and sometimes really don't understand. So just by a show of hands here, how many people here are baby boomers? If you can reach your hand really, really high. Okay, great. And how many Gen Xers here? How about Gen Y? Any millennials in the room besides my kids? Okay, so if you look at the distribution, you can see that we're really skewing toward baby boomers making decisions for millennials. And that's what's happening today in terms of money and financial services. And I think I'm going to introduce Andrew now, who's the Senior Vice President for Scratch, which is a Viacom company, I believe. And it's an outgrowth of, I think, what is pretty obvious for us who grew up on MTV and grew up on some of the brands. We know that Viacom holds a lot of interest and holds a lot of information in terms of what the behaviors are cross-generationally just due to the brands that they have. So Andrew is going to tell us a little bit more about what we need to know about millennials and the future of financial services.
Okay. All right, Mike. Okay, I'm on. Oh, there we go. Hi guys, how's it going? All right. Oh. All right, there we go. Well, thank you, April. My name is Andrew, and I am part of Viacom. I'm sure many of you are familiar with Viacom, home to many globally recognized media brands from Nickelodeon to Comedy Central to MTV and VH1 and Paramount Pictures. 24 hours a day, 7 days a week, around 160 countries around the world. Our fans are inviting our content and our experiences into their lives, into their screens. So that means it's incumbent on us to understand them better than anyone else, to know what's driving them, figure out what resonates with them, and build that visceral audience connection that drives our business. Enter Scratch. At Scratch, we like to say we open up the API of Viacom, and I have to say I've said that a few times, and I'm thinking that with this crowd that actually might make sense. Essentially what we do, we're a consultancy that pulls back the curtain behind everything that Viacom knows about its audiences and translates that to other categories in our partners' business to help them resonate in culture and further connect with the target they want to reach. Which means that often means we're talking about Viacom's biggest and most powerful audience, the millennials. And I saw a raise of hands. There's a few of them in here, born 1981 to 2000. That's how we define it. I think there's many more in this room who might own a millennial, so to speak, like April. So I'm curious for your feedback and your thoughts on what I'm here to share today. And I'm very glad to be here. Well, while we're in here, 2.4 billion of them, that's a third of humanity, are out there deciding what and who goes with them in the future they're going to create. They decide what to destroy, what to reinvent, and what to leave behind. Speaking of which, who remembers Blockbuster? We do. We used to own Blockbuster. Believe it or not, in the US there used to be 9,000 stores. Millennials happened. That's what happened. They're the largest generation in history, and they're changing everything in their path. As consumers, it's not just their incredible purchase power, which we all know continues to grow and grow, it's how they consume. Take a look at the rise of Airbnb. I assume you guys are all familiar with what that is. Today, they're in over 190 countries, booking rooms every 2 seconds. They're already the 5th largest hotelier in the world, and they're on pace to become the largest very soon. They got the hospitality industry a bit rattled, you could say. Even when they're not direct consumers, they're massively influential. At Nickelodeon, we call them kidfluence. They're literally the chief technology officers of their family, teaching their older parents how to operate in today's society. And you can see here, parents are bringing them in to get input in decision-making on some huge household purchases, what vacations to take, what cars to buy, maybe where to purchase their next home. I'm sure you're also familiar with Yelp. It's a great example. About half its user base is millennial. Harvard Business Review did this great study that correlates a 1-star increase of positive review lifts a restaurant's revenue by 5%. So their impact and influence is enormous. It's already happening. It's changing businesses. We're not going to talk about this today, really, but even within our walls, and I'm sure you're seeing it at your companies, they're starting to change the very notion of what work and the workforce should look like, from careers and hierarchy to leadership to recruiting. They're coming in with new expectations and new behaviors and starting to make us think a little differently about how we do our jobs. And for some brands, they've got nothing but love, right? We continue to see them line out outside Apple stores to spend their entire paycheck on a new device. So how is it that some brands and some industries are getting massively disrupted and transformed at the hands of this generation, and others continue to be loved and adored? That's what caused us to launch this Millennial Disruption Index. It's a 4-year massive study across more than 25 different verticals, talking to more than 30,000 different respondents across generations to understand which industries are most ripe for disruption at the hands of this generation. Bottom line, 2 main things matter when it comes to disruption for millennials: how loved you are and how different you are. How emotionally connected is your brand to millennials within a given category? And how different are the brands within a category perceived by millennials? When love is high and the brands appear different, the risk for disruption is low. Think technology products and online services. But when there's very little love and millennials perceive all the brands to be doing the same thing, the risk for disruption is high. We've identified a number of different categories where disruption is high. And guess what? Banking is at the top. To millennials, all banks seem the same. In fact, 53% of them say, the services and products I get from my bank are exactly like what I could get from any of the other major banks. Let's dig a little deeper. So when we map out some of these love scores of brands across the spectrum of industries, some noticeable and expected winners pop to the top: Google, Apple, Facebook, no surprise there. What you might be surprised to see is that brands like Crest, Advil, and Tide also rise to the top. And why is that? Well, we did a lot of work to decode the drivers of brand love underneath this, to figure out what really makes a brand resonate in their category. And to make a long story short, the drivers differ across generations. So what drives love for a millennial is different than a boomer and an Xer, and it's different across category. So there isn't just one playbook that's going to translate across categories. You see here in orange on the left of your screen, those are some of the major banks and where they fall. What's even more complicated is we're not just competing in the category that we do business in. Millennials are judging you by every great experience they have across all categories. So when they have that awesome retail experience at the Apple Store, or that incredible customer service experience at Zappos, those are the expectations we're dealing with, and they're bringing them into the banking and payment industry. And the speed and the rate at which they expect disruption is incredible. It's imminent. Just look at these numbers. 2/3 of millennials, might be a little hard to read, say that the way we access our money will be totally different in 5 years. 1/3 of them are willing to leave their current bank in just the next 3 months. 70% of this generation says that in order to be a successful business, you need to constantly reinvent and change what you're doing. And I think that's evident here. Nearly half of millennials are counting on tech startups to overhaul the way banks work. I think we're already seeing that. I'm sure many of you are seeing this every day and are familiar with all these new emerging players who are starting to redefine how we access and manage our money. Lending clubs changing the game for how to access small loans, supporting the startup culture of this generation. Venmo's tapping into the social identity formation and broadcasting that this generation does over a payment network. It's very exciting to see. And we're seeing a lot of the big players too respond quickly and start to respond to this threat. Building innovation labs to partner with entrepreneurs and startups, starting to invest in digital currency and Bitcoin. It's all very interesting and we're excited to see it. So what do you do? Okay, we're in this situation. Risk of disruption is high. How do you resonate? Well, we start by understanding them, studying them, trying to get underneath what drives them, figure out where they're going, and how we as a brand, or we as a company, or we even as a product, what role we can play in their lives. And I get it. Why should we even have to do this, right? What makes them so special? Certainly, there's tons of press out there. They're the instant gratification generation, lazy, spoiled, entitled. I don't know what words you guys might have. I don't find those particularly helpful or productive if we're trying to win the love of the generation, though. I think you have to go a little deeper and understand what's truly driving them. And I get it, it's hard. They're making our job so hard. But we love them. They really can do just about anything, right? You know, 22 of Forbes' top 100 most promising companies are being led by millennial CEOs. They're not out to destroy the world, although it may look like that sometimes. They're out to find what's new and different and create something better that's going to benefit all of us, and that's creating huge commercial opportunities for everyone here. Let's face it, they're not really sure about us, and can you blame them? They've inherited a world of problems. Here in the US, they're the first generation ever to say they're not going to be as well off as their parents. And when you talk to them, they talk about the social, political, environmental, and economic outlook of their upbringing, and at times it's very bleak. At the same time, they love us, right? We're their guides, we're experienced, we're knowledgeable, and if you're a millennial, I'm talking about the Xers and the boomers in the room, and that's because they have a relationship with authority that's different than the generations before them, and it starts with their parents. If you look at boomers, boomer kids were expected to be seen and not heard, right? Millennials were raised at the center of the family. Literally, their mama and paparazzi behind them, documenting their every move, every moment of their life, telling them they're going to do great. We went on to ask millennials around the globe how they viewed their parents. Almost half of them described them as being both equals and authority figures. So at Viacom, we stopped calling parents, we now call them parents. But it's no wonder that you get a stat like this then when you think about that. 84% of millennials say, I'm sure I'll get to where I want in life. Of course they should. I just told you they had the biggest cheerleaders in their corner from day one, telling them they're going to do great, they can achieve anything, giving them trophies for coming in 11th place. Still happens. I'm a parent of a post-millennial. I do it. I'm guilty. Anyway, if you stop there, I can understand why you would say entitlement. You could see them as entitled. But again, that doesn't feel like we're really getting underneath what's going on there. So we go to dig deeper, and we try to understand what's truly driving the generation. Across the globe, 76% of millennials say they're afraid of not living up to their potential. We wanted to dig even further. This chart might be a little hard to read from where you are, but I'll explain it. We asked them, are you behind where you thought you'd be? And the left side of the screen is 26 to 30-year-olds. So you're getting into your late 20s, you're thinking about your life moments are happening, things are changing. Pretty traditional basis of comparison there, 39%. What's interesting to me is the 22% number. 16 to 17-year-olds, 22% of them believe they're behind where they thought they'd be. Where did you think you were going to be when you were 16? I just wanted to get my license. That's all I wanted. But they're growing up. They're the first generation growing up in a world where they're seeing their friends, people they don't even know, celebrities, accomplish amazing things, go to amazing places, study amazing things. And they're assessing their worth by that. And that's having an amazing impact on how they view themselves. So there's a gap between the reality of their lives and the expectations they had. And that's creating a real fear. And that's a tremendous opportunity for brands and products and companies who can understand that and tap into that and get in their corner. I'm going to show you a quick video here. I hope it runs. That is an example of a jeans company who's tapping into this fear and this understanding. And they've risen to the top in the category. Do I hit it again to play? Oh. Oh. Well, might not work. It's Levi's, and they have an incredible spot. I'll send it around, or we'll get it up at some point. But they've risen to the top of the category because they understand this underlying fear. And they're speaking to millennials in a way that gets them and understands this dichotomy between expectation and reality. You think we can get it to play? Yeah.
This is a pair of Levi's, buttons and rivets and pockets and cuffs, and the thread that holds it together. When the road gets rough and the sky gets jumpy and the stars start falling on top of your head and the waves start breaking against your legs, it's the thread in your seams that's tied to your dreams. It's the soul in your feet that keeps the beat. You're gonna be great, you're gonna be great, you're gonna be great, you're gonna find the cure, you're gonna be famous, you're gonna be shameless, spitting seeds in the wind, tap dancing with your shoelaces pinned to the back of a bus at the end of the road at the bottom of the ninth with a crown on your head. You're a queen, you're a king, you're the solo act in a sold-out show at a 6-story stadium, and you're proud, you're a hero, you got a hero's grip, swinging by a single stitch. You follow your heart, follow the leader, you're the leader. Are you joking? Are you breaking? Are you shaking? You're the next living leader of the world. You're a kid, holding on to the thread that holds it together. This is a pair of Levi's.
That's a jeans commercial. I mean, if they can occupy the space, imagine what a fintech company can do or a financial services company can do with the same kind of message. About to wrap up, and April and I are going to talk just a couple other things. The importance of being clear and consistent in your message is important, now more important than ever. This generation is moving in a world with compressed time and space. These stats blow my mind every time I see them. I won't read them all. Millennials consume over 9 hours of data each day and only 6.5 hours. The amount of words we all now consume has gone up to 100,000 words a day, a 350% increase from 35 years ago. It's amazing. Feels like we're totally distracted and overwhelmed, and 73% of millennials say technology is creating those distractions. At the same time, they say their ability to pay attention is getting better or staying constant. They're very confident in their ability to navigate the noise and spend time on the things they love. And this is what it looks like when they're all in on the things they love, sometimes to the level of tattooing their favorite brands on their body. But if you're a marketer or a leader and you're trying to get support for your message or your brand, you've got to think about how we drive that level of engagement, of enthusiasm, of fandom. We also got to ask ourselves, what do they see when they look at us? Do they see a company that understands what's going on in their lives? Do they see a company that's going to get behind them and help them reach their potential? When you think about it in those terms, we might not want to ask if we're selling credit, but are we financing human endeavor? And I think when you think about it that way, there's a tremendous opportunity for this industry, the financial services and tech industry, to get in their corner and help them make the things possible that they want to achieve. Thank you. Wow. Let's talk.
It's thrilling, and it's such a huge opportunity in financial services. But I think the first thing that comes to my mind is I've often been called a baby boomer with a millennial mind. Mm-hmm. Is millennial a mindset?
I think some of it is. So I think we see across industries where millennials are making things better, and other generations are like, well, I wanted that. I wish I had that, and hopefully we all get it. Certainly in the workforce, a lot of changes are happening that way. And I think it's about the tendency of this generation to make it happen for themselves, whereas other generations before that might have accepted the way things were. So I do think there are things that the change that they see are things that is probably intergenerational.
Yeah.
But then at the same time, I think there are unique factors that have affected this generation in a time and a place that haven't affected other generations that do make them unique.
One of the things I've noticed in financial services, which is of course slow and a laggard industry, it's interesting that you showed the Levi's commercial, because I don't think there would be any bank commercials or financial services or wealth management commercials that would look quite like that Levi's commercial. So I think that, you know, banking, of course, and some of these under financial services industries need such a push. But some of them I see going toward reverse mentorships. What do you think about that?
I think.
Yeah, I was just going to explain a little bit, but go ahead.
Oh, no, go ahead.
So reverse mentorships I've seen in some of the banks where they have baby boomers, some of the more senior managers taking more junior people, millennials, because they're leaving the banks quicker. They have no stickiness with their jobs. And so as a way of really understanding more about how each other thinks, they've sort of bonded them together.
Absolutely. I think it's a wonderful move. I don't think it's isolated to the financial services sector. We do it in our company. And again, I think it goes back to that, the way they were raised and the bi-directional relationship that they had with their parents. Their parents sought counsel to them on how to use technology, how to even enter the space of social media. And at the same time, their parents were teaching them the ways of life and how to grow up. And I think bringing that into the workforce, I even think bringing that in terms of if you're a brand with an outward consumer-facing message, the notion of co-collaboration, bringing them in on the process to build your thing or get input from them, all taps into that same thing. And it's critical for your success. And quite honestly, I think it's an expectation of this generation in whatever environment they're in.
And what about the 2008 financial crisis? How did that play into this? How did that play into both for baby boomers in the way that they raised their millennial children, and the millennial children, what do they think about financial services in Wall Street?
Yeah, I mean, I think a lot of the data I shared with you today has got to be partly the direct output of that. I think what it might have done even largely is the macro picture of what it did to their environment of being raised, seeing their parents, their aunts and uncles, their grandparents, who had been loyal to one organization, one company for maybe 30, 40 years, get dropped out just like that. And that questioned even their approach to what it means to have a career at one place, what it means to be committed. That's why I think you see many of them taking charge of their own futures and their own careers, whether it's in the maker movement or the startup culture. They know they have to do more with less because of that moment in time, and they're making it happen for themselves because of what it means. Now, as far as what it means for the bank brands and some of the brands responsible for that, it's hard to say. I mean, I do think there's a trust issue there. I don't think like all is lost for the bank. I do think there's still big opportunities for the big players, the regional players, and the local players. And it's just a question of building that trust, and I think making it so millennials can see themselves in these brands, in these institutions, in ways that I don't know if they're doing just yet.
You bring up a really good point that we spoke a little bit about earlier. And earlier this morning, I know some of the MasterCard people were talking about just agility. When you think about financial services, it's certainly made up of the three sort of segments that you talked about. The really big brands, the big global banks, the medium-sized regional banks, and then the community banks. I know who I think, but who do you think is going to fare best as we move forward?
I think the big banks have it cut out for them. I think you're going to see a lot more movement to regional and local, and that's largely because of the high touch and the human element to it. Certainly we talk about technology and millennials going there with everything and automating everything that they can, which is true. I do think the human side of things too, when it comes to something so important as your money, is going to play a big role in this. And I only say that's not that the big banks can. I just think the local and the regional players probably already are ahead of that in terms of it.
And they're not so agile. I would also say, I'd be curious about your opinion. I think some of the regional and community banks have also sort of eschewed the one-size-fits-all model. Big banks have typically had the, here's our product, do you want to buy it? You don't want to buy it, you can go to the next bank. What do you think about the one-size-fits-all service model now?
I don't think it's going to hold out very well. And again, I think this generation has unique expectations of how to interact, of how to play, of who they are and their potential, as I talked about, and everything they can bring. I think they're going to want even something that clear in their transactions around money. And we've done a lot of work. This is not to me non sequitur. We've done a lot of work in the automotive section too, and when you think about the experience of going to buy a car in the dealership and the retail and that aspect too, we're seeing a lot of disruption, obviously, and changes in there for that same reason.
Right.
The human touch, get to know me, add more transparency to the process. Just tell me what you're doing. Don't make it so complicated, and
Yeah, I think there's a lot of mystery around buying a car. I'll give you another non sequitur though. I was thinking about something else I've noticed in my practice too, in terms of the globalization of millennials. So you used to see that baby boomers and retirees would save up their money and then they would travel, right? That would be sort of an end of life experience. And that certainly doesn't play out for millennials. They've become such a global and mobile group of people. How does banking really address that?
It's a good question. I mean, I think if banking can somehow make the connection to them fulfilling their dreams or their wishes of pursuing that, whether they're doing it when they're 25 or 65, I think that's a huge advantage and opportunity for banks, and one that most brands or other industries can't really sit in as being the person that helped make this possible. And I'm not a banking guy, so I don't know what sort of models or investment models you could build for this generation that would let them take advantage of some of it sooner than later. I don't know. I do think your point on globalization is one of those foundational principles or things that has happened to this generation that makes them so different, and not just, well, this is a life stage, they're young and they're this way. The world has gotten so much smaller to them, right? And technology and social media certainly has fueled a lot of that, but they believe they can get in touch and see anything and experience anything in such a simpler and easier way than any generation has before.
Not only do they believe it, they can.
They can.
I mean, I discussed with my millennial children, I had to have a pen pal, and I had to be introduced to a pen pal in order to meet somebody who lived in Finland. And today, if I want to meet somebody who lives in Finland, just as easy as, Google search and finding them. So
Right.
There is more connectivity between people, right? And
Yes.
I think that's what's really driving a lot of this. One other question I was going to ask you has to do with the Chief Technology Officer that you mentioned. I think that maybe just one comment on that. What a role reversal that you talked about. I mean, it used to be the parent was the lead of the family. We've all seen Leave It to Beaver and Father Knows Best, but now it looks like Son knows best.
It is amazing when we sit down and talk to them, and certainly they're now, the higher percentage of them are grown adults now, but we've been talking to them for 15 years, that was the dynamic in the household. And I think it's even more true with now the generation after them, which technically I know we call millennials digital natives, which is accurate. The post-millennial generation is truly the first generation that since day one they were born, technology, digital was rampant in society, and mobile even. And so I'm really curious to see what happens there with that generation and their parents. But I do think just the openness between the friends and the friend relationship of parents and kids, let it become the chief technology officer role, because I think the parents were raising them in the way that just gave them a seat at the table.
Okay, great. Well, I want to thank you, Andrew, for presenting this very interesting study from scratch, Viacom, the Millennial Disruption Index. And I hope that there's some future for us. We should all go home and ask our children what we should do, what we should buy, and what we should wear, I guess, too. So big round of applause for Andrew, please.
Thank you.